Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bullish hanging man pattern on Friday after the previous session's bullish engulfing pattern. It was not a new recent high. That happened actually on Wednesday last week, but it was the highest close since April last year. Above, we still have the middle tine, highlighted in bright red on my daily chart, of the late November 2022 to early January this year bullish Andrews pitchfork, that's currently at 109.30, as well as the interesting but untested 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. This bullish Andrews pitchfork has been showing the bullish angle of attack since the start of the year. Meanwhile, support below is again, unsurprisingly, the May 2020 low at 107.66 and the April 2020 low at 107.25. Now, so far today, a gapping open higher, so far not filled in, which is interesting, and a move up to the middle time before pulling down, back down a little bit. It is the highest high and high open since April last year. Cable, aka sterling against the US dollar. An indecisive doji crossed on Friday with a short tongue and a long tail on it, and looking like it had aspirations to become a dragonfly doji. This continues to be a reasonable move higher overall, from the break higher past the apex of the whole of the September 2022 to January this year ascending wedge pattern, which is highlighted in dark blue on my daily chart. We now have below support from the breached lower trend line of the ascending wedge pattern, currently at 123.06, as well as the important 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. We have further support at June 2020 low at 122.48 and the Fibonacci and other closing base congestion in the 121.5 zone. Now, overhead, we have resistance at the December 2022 high at 124.45, as well as the May to June 2022 base congestion starting in the 124.65 area and up to the September 2020 low at 126.72. Just above this, we have the rising middle tine, currently 126.78, of the early November 2022 to early January 2023, untested bullish Andrews pitchfork, which I have highlighted in bright red. This is a quite young pattern, but it still manages to show the bullish angle of attack of the market. Overall, the late September to late November 2022 ascending wedge pattern is still the most relevant pattern here and also continues to influence the market. I've highlighted the trend lines for this pattern in dark blue. Prices had previously managed to reach the primary target of this pattern, which was in the 124.20 area, though we still have open the secondary harder to reach target X3 in the 128 even area. Now, so far today, well, a higher open and a further move higher to just short of mid-December's high before pulling back to near the open and looking like a possible shooting star pattern right now. Euro sterling. A bullish engulfing pattern Friday actually, with a somewhat long tongue on top. This wasn't the hardest pattern to construct, as the previous session was an indecisive doji cross. It was nevertheless a somewhat counter-reactionary move higher after the previous session's attempts lower and had actually failed in trying to penetrate the combined supports of the April 2021 high at 87.19, and perhaps more importantly, the swirling entwined mass of the medium moving average, currently 87.29, and the short medium moving average, also currently 87.29. These two moving averages had made what I call a mutated golden cross towards the start of January, with the moving averages entering the wrong way round, followed by a genuine golden cross 2 weeks ago. Further down, the next support is the April 2020 low at 86.69, and I'm not sure how strong that is, as it has been eroded during most of the second half of this year. Meanwhile, overhead, well, we don't have that much until the 50% Fibonacci line of the March 2020 to March 2022 move at 88.51. You remember this was the cap on the roof pattern seen back in November last year. Now, what had fortified this interesting move lower early last week was how the previous week had been a weekly key reversal up, and thus early last week's actions lower were very much a countering action. The halting of that move lower by the combination of the moving averages and the April 2021 high is therefore very significant. So far today, a higher open and a cautious move higher. US dollar against the Indian rupee. A third bearish black crow on Friday, with a first dip and close below the recent 50% Fibonacci line at 81.13. However, the move lower was not strong enough to tackle the next support, and that's the early August to date uptrend, currently at 80.94, with the market stopping short and closing just over it. Now, I have highlighted support in bright red to not only show it more clearly, but also to acknowledge its role as the lower trend line of the August to September 2022 ascending triangle pattern. That was so influential during autumn and winter last year. Now, looking below this support, well, we don't have much until we hit a combination zone of the November 2022 low at 80.46, the middle time, currently 80.29, of the October 22 to January 23 bearish Andrews pitchfork, which I've conveniently highlighted in dark blue on my daily chart. The Fibonacci congestion at 80.21, the rising long moving average, currently 80.13, and the September gap 80.06 to 80.18. That's quite a combination below, but there is something further which I will detail shortly. Meanwhile, topside still has available the pretty obvious cap of the rising medium moving average, currently 81.75, especially on a closing basis, and also influence from the declining short medium moving average, that's currently 81.95, that is just a little bit higher. Now, the big pattern here, and I suspect the reason why supports below have become very influential, is not the bearish Andrews pitchfork, though it's big enough a pattern of it on its own. Rather, it's the action since September 2022 to date, forming a large double top, Adam and Eve type pattern. We are currently on the final leg moving lower, and this pattern will very much depend on whether the market will drop down to the neckline of this pattern, which I'm currently indicating as being in the 80.20 zone. It will then depend on what the market will do once it gets there. Now, so far today, a gapping open lower below the uptrend, but then a really strong reversal back up, such that we are currently looking at today as being a combined key reversal up and bullish engulfing pattern right now, with a strong move up over the 50% Fibonacci line and a good distance towards the slowly rising medium moving average. US dollar against the Brazilian real. A somewhat reactionary bullish engulfing pattern on Friday after the previous session's indecisive spinning top. Prices pushed up through the long moving average, currently 517.95, as well as the congestion at 520.31 and the 50% Fibonacci line of the March 21 to May 22 move at 522.76. The move higher finally came to a halt at the flatlining medium moving average, currently 525.24, before moving down to settle just over the support at 520.31. Overall, we are still in between the overhead declining upper time and the middle time. The upper time is at 528.23 and the middle time below, currently at 505.21, and that's the well bashed and broken July to September 2022 shallow bearish shift pitchfork. This pitchfork is highlighted in dark blue on my daily chart, and it had seemingly repaired itself despite the previous onslaughts. Over all of this, perhaps the most interesting recent feature had been what already happened by the 12th of January, and that was the setting up here for a monthly key reversal for January already. If we close on the 31st of January either under 518 and 518.51, let's say, or over 528.60, then we're beyond. Anything in between would have the lesser outside month pattern, and right now we're sitting in an outside month pattern territory. US dollar against the Mexican peso. A reactionary bearish engulfing pattern Friday after the previous two sessions had seen the action and result of a key reversal up at the recent low of the market. Prices were capped by the middle time, currently at 19.0304, of the late September to mid-December 2022 bearish shift pitchfork, which I have conveniently highlighted in bright red, whilst the base was a combination of the support at 1885.40 and a well-broken upper tine, currently at 1881.36, of the big old March to July 2022 bearish Andrews pitchfork. I should so like to retire this pitchfork, but as long as it provides dynamic support or resistance, as we've seen here in this action on Friday and today, I'll keep it despite it cluttering up my daily chart. So far today, a further attempt lower below the support at 1885.40, but halted by that broken upper tine once again.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.